And
Okay.
with this program, what I do is I have a back tested program. It tests very consistently back to about 2011.
Before we start, let me remind you that all the results you see on the Collective 2 website and this video are hypothetical. You can read more about why we say this and what that word means on this page, collective2.com/hypothetical results. In this video, you're going to see charts and numbers that generally portray good trading results, although not always. But keep in mind that in many such cases, such trades were not placed in live accounts. And in those cases where live trading did occur, the results shown here are a mathematical average of multiple live trading accounts, so there's no single account that exactly matches any of the results. Finally, remember that trading is risky. Although this video may show you hypothetical results that are profitable, it is also possible to lose money. There's no guarantee of success. In fact, most people who trade lose money. Collective 2 and/or trading in general are not right for everyone, so be careful to weigh the real risks before you decide on using a service like Collective 2. Use good judgment and never trade with money you can't afford to lose. So welcome back to the Collective 2 channel. My name is Roman, and today we have a very special guest named John with us. John is one of the strategy managers on Collective 2, and for those of you who don't know, Collective 2 is an online platform that's looking to replace the hedge fund industry and bring talented strategy managers together with investors, and John is one such strategy manager. Just going to be asking him a few questions today. So how you doing, John?
I'm good. Thank you.
All right. So just tell us a little bit about your background and how you became interested in trading. I saw that you had an engineering background on your profile. So how did
Yeah,
that kind of come
yeah.
about?
I'm mechanical engineering by profession. I got a finance MBA in the late '80s, early '90s, and of course, where did I go to? I gravitated to trading.
Mhm.
So I started with stocks and stock options. Went to futures, gravitated to E-minis for many years.
Mhm.
And then I started to head over to what we call prop trading, which is leveraged stock trading. And
Mhm.
I felt I've enjoyed it because it seems much more easy to control risk than it does in the futures market.
Mhm.
I've tried lots and lots of systems. I've done lots of reading. And this is where I'm at today.
You mentioned you're doing engineering now and you're doing investing on the side.
Yeah.
Did you start out just as a full-time engineer, like sort of
Yes.
out of school?
Exactly. I
Mhm.
did. I did.
Okay.
And currently, the program I run on C2 is an algorithm. So it runs on my desktop platform on multi-charts, and I monitor it during the day. So I'm always
Uh-huh.
got an eye on what the positions are, make sure everything's working correctly. But I found once I got my algorithm up and going, the trading really improved.
Okay, so you use some sort of an algorithm. Is that something you programmed yourself?
Yeah. Well, let me explain. I'm going to show you a book.
Sure.
Okay. This is a guy named Toby Crable.
Okay.
He is a very successful hedge fund manager out in California. He traded um, stocks and commodities, I think in the '70s, '80s, '90s, and
Uh-huh.
he wrote this book. And this book was my first great trade. I bought it in the '90s for about $100.
Hmm.
I've seen it on eBay as much as for $1,000,
Wow.
but I'm never going to sell it anyway. This he gives you the basic concept, what he called opening range breakouts. And with opening range breakouts, what you're doing is you're buying strength. All right. So
Mhm.
you're looking for a pattern setup, going in, buying strength, and then getting out by the end of the day. Um,
Okay.
I really don't use his setups in this book. I really use his concepts. He was about you got to be patient. He had some days where he would go in and work at 9:30. If he didn't see a setup by 9:45, he left for the day. He didn't care
Hmm.
because he went by the numbers. And
Okay.
with this program, what I do is I have a back tested program. It tests very consistently back to about 2011.
Okay.
So it's a model. It is traded about the same in my actual on C2, a little bit less, but there's
Okay.
slippage and stuff. But it's a well thought out, very disciplined strategy.
Okay.
Yeah.
So are you buying on the market open if there's strength in the pre-market trading?
I do look at the open, and I'll give you a tip. I don't touch anything that doesn't have a higher open. but it's
Mhm.
really that the work is done the night before and actually
Okay.
months before. I look at a group of securities, about 100 to 200 securities
Mhm.
in my model, my portfolio modeling software. I
Okay.
do a scan every night. I'm looking for a specific pattern. I look for stable stocks that have had a short-term pullback, like the day before.
Okay.
Those orders are then set up. My charts are set up for those, and then those, the ones that open strong and keep moving, my software will fill.
Okay.
Yeah, yeah, and I try to keep it fresh. I do, like every quarter or so, I will look at different securities, drop some out. Right. For instance, Netflix was a leader 2 years ago. I don't
Mhm.
expect it to be a leader ever again. Maybe
Right.
not. Maybe wrong, but I'll keep rotating fresh names when they come up.
Mhm.
Yeah,
This seems like a really advantageous strategy in the current market that we're having because nothing's really going to open strong in this kind of bear market.
exactly. And oftentimes in bear markets, it'll sit
On
stand
the
on the
sidelines.
sidelines and sometimes catch counter rallies. I did
Mhm.
add a component, a mean regressive component, makes up about 20% of the returns, and that will
Okay.
just float. I'll just look to float really light leverage, some limit orders for bear markets. And every once in a
Mhm.
while, I keep the leverage real light on that, but it keeps my program active, keeps it more
Mhm.
consistent.
So, what factors made you choose Collective 2? I'm trying to get at sort of why you
Oh,
chose Collective 2 when you were looking to get into this kind of
I didn't really
business.
find any competitors that had any scale at all. I mean,
Okay.
I was familiar with Collective Two from years past, and
Mm.
I thought this is the place to go. The platform is very robust. Execution's excellent. It just seemed like they have it all together.
Mhm.
So I looked for some others, but nothing really seemed like that was really off the ground.
Mhm.
Yeah.
So this is just something I'm curious about, but Chicago prop firms, it sounds to me like something that's pretty competitive to get into. And how did you go about getting a job like that?
I had a back tested program. I think I had some other stuff going when I first started with
Hmm.
this prop firm is out of Chicago. Just show them what you're doing and show them your experience and learn from,
So some sort of track record, back testing
yeah.
results,
You're
things
going
like
to take
that.
lumps because they're going to give you so much leverage that you can hang yourself real easy.
Oh yeah,
Really have to be disciplined.
yeah.
Yeah. And if you're not, you're going to have a risk manager is going to be all over you.
Hmm.
So it's hard. It's a hard way to do it. Um, so I miss it. I missed it when after COVID, I missed it terribly.
Hmm.
But now I think I'm kind of maybe matured a little bit, and I don't need the rush. I, can,
Hmm.
I feel like I'm a more consistent trader now
Yeah.
that I'm doing it for someone else, and I'm just being, just applying the process with less emotion.
Hmm.
Yeah, yeah.
So at C2, we're always interested in learning about what strategy managers or how strategy managers go about promoting their strategies. Is there something you've done to promote your strategies, or you just sort of focus on the results?
I Years ago, I lived in Connecticut, and I approached many hedge funds on a program that was decent at the time, and I got nowhere. And the best advice that they said is that we'll find you. Just trade
Uh-huh.
well, and we'll find you. And
Uh-huh.
so, I mean, I like to learn how to be a little bit more promotion, but
Mhm.
I think if I can, my goal is to keep the Sharpe ratio over two,
Yeah.
and I think people will find me. And I'm finding that now. The long term, to stick your money seems like it's finding me now. The
Hmm.
first year was hard. I had all the people that jump around,
Right.
but now I'm thinking of finding the people that want to stay.
Okay.
It's good.
So here is your JWB stock and ETF ORB. Is that kind of like your most popular one?
That's really, that's my main program. I have an S&P one, which I've been kind of not doing a lot with, but not a lot of good signals.
Uh-huh.
And that's all I have right now. Yeah.
Mhm. All right, so it looks like this strategy has been running since early-ish 2020. Yeah, I mean, you're outperforming the S&P, your equity curve's going up. The S&P looks like it's taking a pretty big dip.
And one user asked me, why is your volatility coming down? I said, well, I had a simulator contact me in 2021 about this. He had this exit you use at 12:30. If a position goes down by 1% and the volatility is low, just get out after 12:30. And I'm thinking, oh, okay, this will hurt performance. It'll probably reduce, but hurt performance. I back tested it in multi-charts.
Okay.
It made more and it reduced the drawdown, which that never happens on a rule.
Wow.
So I do that now. So any doggy positions that kind of just lay in there after 12:30, I just get out for my ORV trades. And so I think that's helped. That's gotten those, that March 7.6%. I hope to avoid that. But I think you'll see the trades are melting out. Because when I first started, I had some real wild swings on trades. I'm getting better at that. It's just I still need, market to really make money in this. It's when the market is going up. I mean, I'm in defensive mode now, the way this is.
Right.
But to get that 15% month, I still need the market to turn up. It will eventually. It'll come out of this. I'm hoping to have some really good months, but I'd rather be defensive and not have people have big drawdowns.
Yeah, that's what investors generally look for.
Yeah.
Do you have any advice for other strategy managers who might still be starting out?
Just if your system is really volatile, be very careful, because if it's volatility and trades you see, the trades you don't see are going to be worse, because your worst trade is always ahead of you. So look at risk-adjusted returns. Be careful with futures overnight. Anything leveraged overnight, be really careful with, because
right.
I've been around long enough to wake up in the morning. I think I remember 1980, the Black Monday, 1987. You would have lost probably your whole account. So be careful with leverage overnight.
Have you looked at, do you look at other strategy managers' strategies?
Oh yeah. Oh sure. I'll see them pop up in the lower left and look at them. Where's that one? That one guy's got like 97% win rates. He had like a really, I'm like, but it's really interesting. You see some really interesting systems. Yeah, so I do check them out. I do check them. Yeah, I saw some other multi-year ones that really interest me. So maybe I'm thinking next year I'm probably going to open a brokerage account. I would if I found a good one, I'd go and have someone do mine and someone else's if it wasn't correlated.
Yeah.
If they had multi-year performance.
Yeah. Yep, that's what I'm trying to do as well. I'm still in the early stages, but we'll see. Yeah, I found something that I've started doing that's really helped me sort of gain some traction is I've stopped making like completely black and white decisions. Like if I have a position on and I'm like seeing something I don't like, I'm not gonna like close the whole thing. I might close like a part of it. Or if I used to if I'd have a trade that was in profit, I'd used to mull over whether or not I should close it or not. But nowadays I just like close part of it, like take some profits and leave some on. You
ever heard Larry Connors? If you read his stuff, he's proven that stops
don't work.
They protect your ego. They do not help you trading.
No, they don't.
They don't.
And
most traders will say stops hurt their performance, but at some point you got to get out.
Yeah. My stops nowadays have gotten really wide.
That's what I do. Light stops. Okay, I'll throw the towel in, but you can't just be trying to think the tight stop's going to save you or make you more profitable. It's not true. All right.
So I think we'll end it there.
Fantastic. Roman, thank you.
All right, my pleasure.
Great. Okay.
Thanks for your time.
You take care.
All right, take it easy.
Yep.